Hello, I'm Rohit Mehta, the President and CEO of Global X Canada. In fact, Canada is where ETFs started in 1990 and have rapidly grown globally ever since. So today, we're going to be talking about the growth of ETFs globally. We're going to be talking about some of the advantages of ETFs. And in fact, we're going to be moving that all the way through into the growth of robo-advisors.
And I'm Brycki, so I'm founder and CEO of Stockspot, which is a robo-advice business in Australia that Mirae Asset의 has recently invested into. And actually, I never knew that Canada was the first place that ETFs started. Yeah, how has it evolved in Canada over the years?
Yeah, absolutely. It's not a super well-known fact, but it's something that we're definitely proud of. And even in the Canadian landscape, as you were just asking, we have been a first for many of the innovations in the ETF industry over the last 35 years. What we've seen in the Canadian landscape is broad adoption from investors, both institutional as well as retail, and then retail is subdivided into financially advised as well as the DIY space. And so starting from 1990, today we're $440 billion in ETF assets across 1,200 ETFs. And so how would that contrast to the Australian market, Chris?
Well, it's interesting. I think even though Canada and Australia are geographically a long way apart, I mean, we're both commodity countries, and in Australia, some of the first ETFs were actually commodity ETFs. So, one of the things that stoked my interest in the ETF space 10 years ago was I noticed there was this fantastic gold ETF that is now a Global X Gold ETF that really gave access to this asset class in a really cost-efficient and tax-efficient way. I think in the past for Aussies to buy gold, you'd have to go and buy physical gold bars, or you'd have to, buy some sort of other derivative that was expensive. ETFs are a great way to get access to commodities. Obviously, that's evolved, and you can now access commodity shares and more thematic type commodity investments as well. I don't know, how are Canadians looking at commodities and these sort of thematics?
Absolutely, we're seeing that adoption. But if I take just a step back from that and we start off with ETFs and some of those advantages, it's really democratized investing. And so you talked about from the accessing commodities like gold and the accessibility there. But if we just look at the overall ETF as a investment vehicle, it's accessible, it is simple, it's low cost, it's efficient, and that is really spurring the adoption of ETFs, not just for commodities is absolutely an important and growing space, but we've seen it for broad equities, whether you want exposure to a whole market or you want it to specific sectors. And that also translates into thematics for sure in that area where we've seen a lot of growth. Not that I'd call it a thematic, but we can talk about AI briefly because it is something that is pervasive among many businesses. If you take a look at the S&P 500 in the Q1 earnings call this year for out of all S&P 500 companies, 200 of them talked about AI. Is that something that you're seeing and looking at in your business today?
Well, yeah, definitely thematics have become kind of the new trend in ETFs, and probably similar to Canada, the original ETFs in Australia were just ways to get access to broad markets. In Australia, our market tracks the ASX 200, and that was an ETF that came about, a while ago now, I think about 20 years ago, and has now amassed a lot of assets. I think initially Australians are a bit skeptical about ETFs because we all used to hear this story in the media from fund managers that you need to be picking the right stocks and timing the market in order to do well from the share market. I think, obviously the internet and I think just knowledge about indexing generally has educated more Aussies about the benefits, and you've mentioned a lot of them, the transparency and the tax efficiency. So I think over the first 10 years of ETFs in Australia, a lot of these broad market indices were created, and it gave Australians access to global markets like the S&P 500 and NASDAQ. We don't have a Canadian ETF, but we've got Japanese ETFs and other specific country ETFs. It's more of a recent trend, these thematic type ETFs. And so, for instance, Global X in Australia has a few interesting thematics around battery technology, for instance, or semiconductors. And, these are two, big global trends that have, had a lot of success recently, and the companies that are involved with those spaces have done very well. I think it's an area that there's starting to be more and more interest because historically, to get access to those types of specific themes, someone had to go and research stocks and go and pick which ones to allocate into and really manage that in quite an active way. Whereas now, if you believe in lithium as a trend, or if you believe in AI as a trend, you can simply pick an ETF that already does the stock selection for you. Yeah, I think the other interesting aspect now is that AI itself could be helping to develop the indices that are investing into AI stocks, which blows my mind that AI could be used in that way. But I think Mirae Assets is looking into that sort of space as well.
Well, you hit on a really good point there. I'm Global X Canada, you're Stockspot in Australia, but we're all part of Mirae Asset Global Investments. And what that does is it allows us in today's environment to being able to bring that global strength, that global expertise, and being able to tap into themes like AI in terms of how it can improve your business, not only from the client experience, but also in terms of investment products. And we look at it the same way in Global X Canada. We're looking to see how we can incorporate AI into our day-to-day businesses in order to have better client experiences. And then in return to that, we're also looking at it in terms of product. So we have, a semiconductor ETF for really trying to tap into the chips that are needed for AI, all the way to broader strategies. So there's a Global X business in the US has a huge ETF that's just crossed $2 billion, AIQ. We now wrap that ETF in Canada, AI Go, for AI exposure. And we've just launched an ETF built on a Mirae index on innovative tech leaders. So the AI is pervasive, and being part of a large organization, global organization like Mirae Asset, has been something that I think we both really benefited, which is pretty exciting.
And clearly, yeah, ETFs are transcending kind of countries as well now, as you sort of say. I think we've seen in Australia, we're a very small market compared to the rest of the world. I think 2% of the world GDP. The big challenge Australians have as well is our market's very concentrated in a couple of sectors. We mentioned we're a commodity country. Between resources and bank shares, I think it makes up 60 or 70% of our market. So historically, it's been hard for Australians to access sectors like biotechnology or technology that are actually not, strong aspects of our economy, but great in Korea or the US or other markets. And so, that ability to access other markets, I think, is, a wonderful, aspect of ETFs now that, I remember when I started investing in shares many years ago, all you could really pick from was this small selection of stocks in your own country, and you never even could dream of, adding Apple shares or, other global success stories into your portfolio.
Absolutely. I mean, you talk about, the Australian economy. It's very similar to the Canadian economy, which is why we're geographically so far apart. But from an economy standpoint and a development standpoint, very, very similar. And I think it goes back to what you were just talking about, is ETFs really provide that democratization of investment solutions. And what we've seen is that ability to, if you want to invest in emerging markets, we think back not that long ago how difficult it would be for an investor that can't trade on exchanges in emerging markets to say, how do I actually get access to that in my portfolios? I want to tap into that on the robo side for a second, but if I take a look at the Canadian business in the ETF space, what we're seeing a lot of growth in is that DIY space, as well as the asset allocation solutions. So asset allocation, if we compare it to, it's been really strong in the mutual fund space. If we take a look at how that's evolved, it was really about every dollar in asset allocation ETFs represented about $200 in mutual funds. And that has actually shrunk as people see that opportunity in asset allocation ETFs. So now the ratio is about 100 to 1. So still a long way to go, but we've come a long way at the same time. And those asset allocation ETFs allow investors to express their view for an overall portfolio in a one-ticket solution. And so you're in the robo world, love to hear how you would contrast that in terms of the value add that you bring to the marketplace, which is significant?
Yeah, I mean, it's a good question. I think originally, those sort of asset allocation ETFs didn't exist in Australia, and that was the opportunity I saw 10 years ago. Although there were these great ETFs around, there was already good gold, fixed interest, emerging markets ETFs, but no one really knew how to combine them well. So Stockspot business model in Australia is really trying to understand the client's needs, their time horizon, their risk capacity, their cash flow needs, and then mapping those needs to the right asset allocation, and then mapping that asset allocation to the right ETFs. And so we've really developed our model as an advised model and really focusing on helping our clients achieve their goals using ETFs, which, even with the advent of ETFs, wasn't necessarily easy for someone to work out what percentage of my portfolio should I be putting in asset class A, B, C, and D. And then actually, how do I compare all of these different ETFs? Because, in Australia, there's something like 30 or 40 different Australian shares ETFs. It's very confusing to pick, should I pick an equal weighted one or a market cap weighted one or a smart beta ETF, and equally with all of the other asset classes. So, our value add is really combining the asset classes as well as the underlying ETFs. I guess that the innovation that's happened recently, and I know you've launched some of these, are these multi-asset funds that make it quite simple for people, if they're already comfortable with picking their risk tolerance, to pick a single product, and with one trade, they can get the right asset allocation, have the right risk in their portfolio, and really do nothing, I guess.
Yeah, and actually have them rebalanced for them on an ongoing basis. I think that probably drives into what we've seen in the Canadian marketplace, which is the growth of both of these groups. So when I look at the DIY space, over the last year in Canada, on an asset basis, it's grown by 40%, which is pretty astounding when you think about it. And similarly, over the last, since 2020, so the last few years, we've seen the robo asset in Canada triple.
There you go. Yeah, I mean, you've got some very successful robo businesses over there. I think Australia is a little bit behind North America in terms of robo adoption. Actually, I was inspired by some of the businesses in North America and Europe originally to set up Stockspot, and Australia just typically is a few years behind the trends in Europe and North America. We're getting there with the robo adoption. What we've seen in Australia is, particularly post-COVID, when everyone was working from home, there was an explosion in DIY investors as well, particularly all of those millennials, the ones on Reddit that were, picking meme stocks originally. What we saw is a lot of millennials started investing in this sort of stock selection way, but then in 2022, when markets got a bit tougher, they realized that actually ETFs gave them a much lower risk way of accessing markets, for real long-term wealth accumulation as opposed to speculation. And so we're starting to see more of those millennials move from stock picking meme stocks into actually diversified ETFs. And then on the older generation, we're starting to see a lot of interest in like income type focused ETFs that allow them to kind of generate their retirement income goals in quite an efficient way. So, we're starting to see different demographics use ETFs in different ways. I don't know, how do you see the different use cases in Canada?
I think you hit the nail on the head. Very, very similar in Canada, and we're seeing that growth of the income space, particularly for retirees. Even when we take a look at the Gen Z space, there was an interesting study that came out just after COVID. 74% of those old enough, eligible to have investment accounts, held at least one investment. So as we take a look at where we started today, the first ETF launched in 1990, to the growth of robo platforms, particularly, congratulations on your business and the growth that you've had in your business, to AI and how that's empowering firms as well as investors in terms of the overall portfolio, the experiences that they're having, and being able to tap into the benefits that we have, being able to tap into the global strength of Mirae Asset, I think brings it all together nicely. It's been a pleasure chatting with you, Chris.
Yeah, you as well. Thanks for the discussion.